Mm-hmm. 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 Let's
Woo!
go.
Welcome back, traders. How
I'll
are we
wake up
doing? We have an absolutely beautiful day coming at you. Looking at the leading report post going over President Trump says Iran acting very differently behind closed doors and begging for a deal. Now, when we look at the fear and greed index and thinking about the broader market, right, a big thing is this war, and that is creating uncertainty, and oftentimes uncertainty leads to fear. And so if you see a deal happen, I would expect the stock market and crypto to see a pretty dramatic rally out of both being in extreme fear. Now, we know on this channel, we like to buy the freaking fear and sell the greed, guys, because that is the best way to trade. Not financial advice, but that is what oftentimes is the most successful way to trade. So top down, just so you guys know, we're going to go over IWM first, Gamestop, AMC, and then a little bit of tinfoil. So make sure to stay the full length of the video, slap the subscribe button, and let's get straight into it, y'all. Also hit the like button. All right. So IWM seeing an absolutely disgusting red day. But when I say that there is hope, traders, I mean it. Because you look at this uptrend, right? We were talking about this uptrend being part of the thesis outside of our all-time high neckline. And you saw this back in 2021 where you rejected, failed breakout, and then really just rug pulled all the way down into 2022. You saw a failed breakout, same thing. And then you broke out finally in 2025, retested that, and you sprung to an all-time high. Now, I'm hoping that this isn't another one of those failed breakouts where you absolutely get rugged, but there is hope, in my opinion, looking at the daily time frame. And I want you guys to take this step by step with me because this is pretty much the technical confluence that I look for when I trade, right? So you're looking at the daily time frame. Although you are currently printing a shooting star candle, nobody likes to see that because it's one of the most bearish candlestick formations in the entire market. But when you look at the broader picture, right, and you look at the technical analysis, you see three things. You see this uptrend still holding strong from previous price action, right? Your 1, 2, 3, 4, 5, 6, 7, 8. Your ninth tap of this daily trend formation, right? And you rejected it, came back up, and now this is your important retest to solidify this as critical support. In doing so, traders, you look down here on the bottom of your screen, you see the daily RSI. You had this RSI wedge formed, which so often, traders, is an explosive formation and one of my favorite ones to trade. So if you see this confirmed breakout successfully retest here and not fail into the bottom of the wedge, that would suck, right? But if you see the successful retest of this falling wedge, I expect this thing to go absolutely ballistic, guys, to absolute tendy town. So that's what I'm watching for on the RSI. It's a very good look to see you pop your head out of here. And now you need to see volume step in and hopefully, right, on the shorter term that this is a shoulder, head, right shoulder. And hopefully that is simply the move that you're making right now is that right shoulder before some kind of broader news to clear up the uncertainty comes in. Now, on the daily time frame, you do have a daily MACD cross, which is also a good sign that the momentum is shifting in the bull's favor. I love to compare these three things, the chart, the RSI, and the MACD, to give you a broader step-by-step analysis on what the bullish sentiment on the stock is. And you can see here it's bullish, right? The general trend right now is up. So that's what we're watching for on IWM. I expect some kind of nice bounce here and hopefully to retest this previous resistance. That would come in right around 260. Now, the off chance that you don't, right, that something happens and you get rug pulled, there is a technical gap that we expect to fill back here at 226. Now, that is not the worst case scenario because there is further gaps, I believe right here at 188, and that would be a nightmare scenario. So let's not talk about that right now. But there is that gap fill at 226 that if you do fail to hold here, I expect you to go and fill. Before we get into GameStop, I wanted to just look on IWM from Weeble's perspective because you saw a nice bounce here on the daily time frame, and you saw a nice close above the 200-day EMA. Now, what you've done is you've gotten back above the 9, and now you're rejecting. So you need to close the daily above currently, what is that 9-day EMA? 248.78. That's going to be critical, and you're currently sitting at 248. So a nice up thrust towards the end of the day, and a close above that would be pretty crucial to see this thing continue higher. All right, that is our short-term technical analysis on IWM. Let's get into, no, not that. GME, baby, as you have this very weird pennant-looking, flag-looking structure. I want to cover the chart, but before we do so, let's talk about something even more important. I need you guys to slap the subscribe button, and let's talk a post from Jackie Latitz. All right, this man, absolute legend. If you don't know him, go hit him up, subscribe, like his stuff, because he is actually a phenomenal YouTuber and trader on GameStop. But this is a phenomenal post. I assume it's just taken from ChatGPT, but GameStop net income 2019 to 2025. So this is pretty much the reversal that you've seen from this company. And I want to emphasize this before we look at the charts, because there's a story being told here. You can see down net income for the year of 2019, abysmal, right? Terrible. You never want to see this. Down, losing net 500 million. Then you saw 215. You saw a little bit more in 2021, 381. You saw 313. A profit in 2023 of 6.7. 6.7. No, I'm joking. In 2024, 131 million. And now you've quadrupled your profits, guys. Nearly quadrupled your profits at 418 million. So to see a 1 billion swing, right? I think I'm mathing there correctly, almost. 800 million to 1 billion swing in profitability in just 5 freaking years, guys, is huge. And when you look at the charts now, right, I wanted to emphasize that because we're just going to go back to 2019, or at least 2021, because you were still net negative in 2021, right? 2021, you lost 381 million. Look at where you were. You had periods where you traded 27. You also had periods in 2022 where you traded at 28. You see this flat horizontal resistance. You are still trading beneath, traders. You are still trading beneath your horizontal resistance of $24, even though you have fundamentally changed the P&L of this company. And when you look at investments, right, I truly do not believe that this number, 418 million in profitability, has kicked in for this stock or priced in for this stock, if I'm being realistic here. And I am so jacked. I'm so excited to see that the best is yet to come on this stock, and the future looks bright, genuinely so freaking bright on GME. And I do believe the short thesis is dead on this stock. So let's jump into the charts here on GME. Not much has changed on the individual charts themselves. There has been a lot of change with the warrants, which we'll get into one second for Only in Paradise, my man. So you've had this up thrust from this falling wedge that broke you out, and you've really just built bullish divergence on this double bottom that we talked about when it happened. You broke out, and now you're within this weird format of pennant formation. Now you're really testing the bottom here, and if you do break, I do anticipate a downswing here to fill the gaps, to fill these gaps, currently sitting at 21.93 and 21.25. Now that's not the worst case scenario, because you would be testing a pretty crucial resistance line here, right? And when you take a zoom out, this is almost the same thing that Neo's done. If you guys are watching this, both analysis videos, right? You have a swing high, a higher low, a swing high, which is a higher high. And now you could be either making your higher low now, or you could still technically make your higher low and fill the gaps. Now, why is this the most bullish scenario for GameStop? This is the most bullish scenario for GameStop because you're leaving behind no technical artifacts on the chart. While doing so, you're making a higher low, and hopefully, right, by this time, if you do see this downswing, you're creating bullish divergence on the RSI. This would allow the stock to reload, right, and to really send higher. In my opinion, you would make that third higher high, and that would come in somewhere along the lines of this trend line, right? You take the highs, you connect it, and that would be almost like a megaphone pattern, very similar to what Bitcoin has been running, a megaphone pattern. And if that happens, guys, there's the opportunity for a bullish megaphone pattern, which, although would be unlikely, in my opinion, could happen. And they do happen, right? If we saw some kind of fundamental bullish news down here, I would anticipate, right, you break this in an up thrust, higher high, retest the top side resistance, use it as support, and then you blast off. That is your absolutely best case scenario on GameStop, to fill the gaps, send it higher, and then fill these gaps up north. Because if we know one thing about GME, it loves those juicy freaking gaps. Because you have filled, I could take you through it, right? You filled every single technical gap except for the ones that you made recently, the ones that you left back in the earnings of June 2025, and then the $73 gap, which is our all-time target on GME. Back here from this earnings, or it was either, earnings. Yes, that was earnings. So you so often see this pump and dump during earnings. You've seen it time and time again. You saw it here, pump, dump, earnings, pump, longer dump, but earnings, pump, dump, earnings, no pump, just dump. That's a sad one. Earnings, pump, dump, earnings, pump, dump, earnings, pump, dump, earnings. This is the most probably diabolical one. Pump and then dump to $9. So you've seen it time and time and time again, traders. So when I look at the historical pattern on this chart, what you're doing right now is so weird. Genuinely, right? You've seen almost no price action occur from this earnings. And to this date, guys, I want you guys to remember, on GME, this is the lowest volume earnings that you have ever had, trading 7 million shares on the daily, ever, since I think 2019 or 2017. Now take that into account with the fundamental change that has happened in the company and how amazing, right? The best earnings in company history in 10 years in terms of profitability. That is crazy. And so when you see this consolidation, I do get curious on the Bollinger Bands, what's going on. You got some expansion here on the weekly time frame, and you kind of got some squeezing here a little bit on the weekly. Shocked to see it. Quarterly time frame, you kind of have squeezing on the quarterly time frame. Monthly time frame, you're squeezed. And that's what we like to see, right? I want to see something happen on the monthly that causes this thing to go ballistic. And to see your squeezing on the Bollinger Bands on the monthly time frame is a good sign. On the weekly time frame, we talked about the importance, guys, and you are still holding your weekly Bollinger Band mid-band. That is the most important thing. That if you want to see this thing not go down to these lows at $20, you need to hold this blue line that you are currently sitting on top of. In fact, the Bollinger Band currently sitting at 22.49. Where are you at? 22.53, right? So you're within pennies of this technical artifact. And if you're able to close above it on the weekly, I do believe that you should see a swing higher here to $25, and this weekly Bollinger Band begin to expand, which would be a beautiful freaking thing, traders. So hopefully that happens. If not the end of the world, right? We went over those situations and scenarios, but man, this thing is doing a whole lot of barcoding. Whole lot of nothing. Yeah. Whole lot of nothing. But in terms of the broader market, we're going to talk about something very important for GME, and that's the warrants, right? Practically off of no news, the warrants down 9% today. Saw a dip beneath that key horizontal trend line that we talked about in our last video about the warrants. And one thing that I said I did not want to see that may cause volatility in the stock is you had this 9-day EMA trailing down, and then you had the 50 lagging, right? And so what happens typically is when you see this occur, that is showing you that the short-term trend is stronger than the intermediate. And when that crosses, guys, you typically see big dumps and big pumps from this intersection, right? You could go back to the last run up and you see right when you see that crossing of the red line through the yellow, that is your 9 through your 50. You saw a gap up of 9.26%. And from that gap up, traders, you have not yet filled the freaking gap. And that is what I believe you're coming back to do, right? You broke this horizontal trend line. You broke your very important only, right? One of your only trend lines on this warrant stock. And so that leads me to believe that either you just wanted to come down to the 200-day EMA and then wick off of it, right? If you see a strong wick back above this trend line currently sitting at 370, it would be my belief that this thing is going to absolutely turn the other direction and fake out, break down. But if this holds, right, and you fail to hold the 200-day EMA, it has never been more apparent to me on this GME warrants that you're going to come back and fill this gap currently sitting at 329, right? Below that, you do see here, we drew this up in our last video, and I wanted to emphasize just how dry this volume trend has been, right? Look at the volume exhaustion here. I wish I could turn this off. I'm sure there is a way to do it. But if you zoom all the way in, look at traders, look at the volume trend. I guess I'm going to have to draw a new trend line. Look at the volume trend. Exhaustion, right? Nothing higher than the previous day. And if it was, is in little stepping stone blips. But you've now seen a very clear and obvious breakout of this volume trend line and into the downside, right? So it makes sense why you've seen such a large move here. And I expect this to either get eaten up and close above this trend line or to lag a little bit and continue to trickle down until you fill this gap. So just wanted to cover that because I thought that Only in Paradise would be asking some questions. Shout out that man, absolutely star-studded subscriber. But let's get into the one, the only AMC, baby, because to date, you're still doing nothing. Whole lot of nothing. Just being honest here. Continuing within this wedge formation, and traders, there is only so much sideways price action that you could do at critical support before this thing either dumps or launches. And I do believe that you're going to see some kind of relief rally here if the broader index and GameStop find that as well. And that is key, right? You zoom out, and you are currently at the most important trend line in the entire stock's history. And I wish I was joking. I wish I was joking. Look at this tap from 2021, right? Look at how beautifully this thing launches a lower low double bottom into a squeeze, right? And from that, you saw a higher low on the RSI. Now, that is practically what propelled you into this 2021 January squeeze. Was this touch of bullish divergence allowed for retail to see that this thing looks freaking ready, right? From that, you saw a almost perfect to the penny tap of this trend line. And when that happened, traders, you saw another touch of bullish divergence, right? And a slightly higher low, but a significant lower low in the stock. Like that. Like, that's crazy bullish divergence. Now you go all the way back, traders. What do you have, right? Woo, what do you have? Tell me. Can someone just comment it below what you have here? Because you have not 1, 2, 3 taps of bullish divergence. And I don't even have to draw the trend line because you see the overall trend, right? Just look at the chart. Look at where you are and tell me, on the RSI, there's a very real reason I have this arrow, the world's best arrow drawn here. We'll draw some more. Arrow. 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 Circle. Arrow. There's a very real reason that I am just memeing right now because that is hilarious. Look at how low you are on the RSI and look at the previous times you were this low. This is on the daily time frame. You always see nice size launches off of this. That's just one example, right? You had it happen back here. Bullish divergence and then launch. You obviously had it back here. Double bottom, bounce out. And time again, traders, even back to this 2021 fractal, right? You saw this double bottom, bullish divergence, launch. You had this double bottom, bullish divergence, and launch. So it is no freaking coincidence that you were all the way in the depths of this wedge, traders. In my opinion, I do believe the best is yet to come. I don't know what kind of fundamental news is going to occur, but I do know that the chart looks oversold. And the 1, 2, 3 taps of bullish divergence while in this falling wedge, traders, is bullish. And I do anticipate a breakout of this. If you don't, honestly, I have no clue where this thing is going to go next. And I don't think anyone does, realistically, right? But I think all we can do in the meantime is wait patiently, continue to see the deep value that we are being provided here, and continue to draw some rockets, right? Continue to draw some arrows. Continue to analyze the stock. If you drop beneath here, guys, this is how I feel. If you're above this trend line, you're sunshine and rainbows, guys. And I do believe you are going to see a volatile move off of this trend line. And I do believe that there's a reason the short interest is going down, because you would not be in your right mind, guys, to short this thing, to short this at this current level. Because people are obviously seeing, oh, what happened? Bump. Oh, what happened? Bump. Oh, what happened? Bump, right? And so what is going to matter, guys? Apes. What is going to matter? And gets me genuinely excited because people are so down on the stock. That is what gets me excited. I get excited when everyone is exiting the play, even though the technicals look kind of solid at these levels, right? And so what I want to stress to you guys is the 200-day EMA is only at 219. If you see a rally, right, above the 9-day EMA, I assume you would chop around and reject the 50. But if you see a rally into the 200 and you cruise past it, retest it, and run, guys, this thing gets crazy once you start to look at a potential golden cross for AMC. And you can look at how well this thing has respected the golden cross for AMC. Look at the rejections, right? Look at the rejection. Look at the rejection. That is just within the last 6 years. We can go back and predate this, but this thing is literally never closed above the 200-day EMA except for during this little stretch here. Closed above it here, rejected. And then you lost it, retested it, rejected, and then you never regained it truly. So this is going to be the most important test in AMC's entire chart history. I don't care who you are. That is it, right? And when you look north, you see the gap fill is currently sitting at $13, $19, and $43. If this thing was to truly find a rebound like Carvana, you would first have to regain this 200-day EMA as support and to stop it from trending down, right? This would be the first time you've done so since February of 2021 and would honestly be the first step in turning this company around. I say so because if you are moving in this upside direction, we've seen the momentum and the steam that AMC brings, right? Because you saw that major squeeze from 10 all the way up to 108. That's a 10x, right? If you were to 10x right now, yeah, it may seem small, guys, but you're going upwards of $10. That is above the 200-day EMA. And I would assume, right? I would assume that this kind of leg would retrace greatly into either this previous resistance trend, which is your all-time resistance trend all the way back, dated all the way back to 2021, or at least the 200-day EMA. Right? So this is where I would expect some kind of retracement. Now, we are talking moon numbers, and we're still below $1. So first step, get above $1. Second step, close above the 9-day EMA. Third step, go and rally into the 200. That is your 1, 2, 3 punch that I believe AMC needs to make in order to find some relief and to hopefully squeeze the shorts out of 20% out of the stock and find some relief. I think that's what I got for today on AMC, GameStop, and IWM. Make sure to slap the subscribe button if you've been watching this long. God bless each and every single one of you guys and your families. And remember, traders, the best is yet to come. Buy the merch. Become a member if you want to support me. It means a lot because I like to do this and I want to keep doing this. And then have a wonderful rest of your day. Peace.